What the is going on with the US economy right now?
Coming on the air with breaking news right now.
I did a 90-day pause for the people that didn't retaliate.
It's what I would be saying if I wasn't a Forex trader. Right now, the world is in one of the most unique economic statuses it has ever been in. And the last time we saw this was back in COVID, a huge wealth generating event for a lot of individuals. Alongside that, you had the recession, which was also a very, very big wealth creation event. Now, why I'm making this video is because I understand some of you guys may be traders, may not be trading, but equally want to benefit from these current news events. Tariffs, S&P dropping, crypto dropping, everything is on fire sale right now. In this video, I'm going to talk you through how I'm looking at the charts currently as a trader who's been on the markets for 5 years, what history made of these events, and how we can look to repeat the same process to make a fuck ton of money. Now, none of this video is direct financial advice. Every decision you make is completely on yourself. I am not your financial advisor, nor am I qualified to do so, so please don't invest just solely based off what I say. This is purely my opinion. Equally, if you don't know me, I would definitely watch some of my previous videos just to get an understanding of what I'm about. Like I said, I've been trading for 5 years. I've been full-time as a Forex trader for 3. And my whole day-to-day job is based around looking at the technicals and fundamentals based around the dollar. I specifically trade the pound to the dollar and the euro to the dollar. However, the dollar index is a very good indication of how the US economy is doing in general. Equally, if you're trading futures, you're going to be looking at the S&P, the NASDAQ, etc. and notice how much they have dumped in recent times. The interesting thing is that if you're a trader, you probably could have seen this coming pre-Trump coming into power. This video, which was over a month ago, let's get TradingView back up. Oh, it's done exactly that to a T, played out towards those lows. So, like I said, as a trader, you can see this happening miles before it happened. I mean, not miles, but you can see it before it happens to a degree. It's not that's unexpected, at least for the value of the dollar for me. Because like I said, I trade currencies and I look at this stuff a lot. Obviously, his tariffs that he's announcing at 9 p.m. at night don't help, but I do think this price dump was almost a certainty before he even came in. Now, the interesting thing is if you actually believe in what Trump's doing. Do you believe he's doing this for the strength of the dollar to increase? And is it a long-term successful, keyword successful? His intention might be successful, but do you think it'll be successful? Referring to his plan here in creating a stronger US economy. Right now, he is in a tariff war with China, which is creating huge volume in the markets for Forex, indices, commodities, whatever you trade. Anything that involves anything will be moving extremely volatility. I don't know. It's basically volatile as fuck. Now, why this is a good thing, because if you're a trader or investor, this means you're able to capitalize on all of this movement. So basically, as a trader or investor, you're generally looking to buy fear and sell greed. So in this current circumstance, as you can see, we're looking at the S&P 500 and its 125-day moving average here. You can see obviously we've dropped massively beneath it. So naturally, that is going to cause extreme fear, especially in the just generic public, which is not where we should be sitting as traders. But I'm sure your parents, your grandparents, or your neighbor, these kind of people are like, oh shit, fucking hell, price has gone down. What are we going to do? But is this the end? Like, no, it's not. The price has always found its way back, and it's going to do the same here, I'd imagine. I'd be uber surprised if S&P just starts dropping and dropping and dropping, because otherwise we're seeing a decline just in the generic wealth of the world. So what I'm trying to say is that this is normally the best time to be looking into at least DCAing in. Now, if you guys don't know what dollar DCAing or dollar cost averaging is, so dollar cost average, let's get it up literally for just you here. Dollar cost averaging involves investing the same amount of money in a target security at regular intervals over a certain period of time, regardless of price. By using dollar cost averaging, investors may lower their average cost per share and reduce the impact of volatility on their portfolios. Okay, so in short terms, what I mean by dollar cost averaging is, let's say you've got a large amount of capital, let's just say $100,000, or a decent amount of capital, let's say $10,000. For you to dollar cost averaging, what you should be doing, in my opinion, is waiting for price to come down on periods where price is in either fear or extreme fear, And at those points, and ideally mainly those points, you are buying maybe 10% of your portfolio that you're looking to invest, or 5%, or maybe even lower, or maybe even higher, depending on the amount you want to invest at that period. But what dollar cost averaging means is that you're investing as price is moving down in smaller proportions. So your average position, let's say you invested, let's take this for example. Let's take the S&P here for example. So let's say you invested on this pullback here, then on this one here, also on this one, also on this one, and then also on this one, and then also on this one. You probably have your average position in and around here. Maybe we'll say $5,700, $5,600, around these areas, because you've got in the dip here, you've got in the dip here, you've got in the dip here, and you've got some of the higher dips up here. So you're probably averaging out around the middle. That's a great place to be, because your dollar cost averaging, if price didn't get this done and price did just continue upwards, you'd be in a solid position, because you've basically caught and played a continuation run of a bullish market, which obviously the S&P is. So you're catching in a great position, and you're following that moving average quite nicely. If anything, you're actually getting in below the moving average, which is what you want to be doing. Now, obviously, we've broken through that, and now this is a very scary time to be investing. But that's when it's probably the best. Like I said, scariest time to be investing. That's normally when most people aren't, but the good traders and one that can see opportunity, that's when they're at least dollar cost averaging in, if not investing more than usual. So that's where I would say this is why this is a relatively good thing to look at. And it's the same with crypto to a degree. If you trade crypto, you're going to know obviously the price has absolutely been slaughtered recently, and obviously a lot of people at that point would be like, I told you so, crypto doesn't work. It might work, it absolutely might continue to all-time highs. I'd be very surprised if it doesn't, and even if it does in the next cycle, then if you're DCAing in right now, you're getting in at great prices, in my opinion, because I'm obviously long-term bullish on crypto. So what I'm trying to say is, if you are looking at price long term or even short term right now, you would probably be catching a really good move either in the S&P or in crypto. So obviously with crypto moving completely differently with the Bitcoin and Ethereum ETF being approved. So like I said, you might not be at the complete bottom yet, price moving a different way, but equally it's the same factor. Most people are fearful of the market right now. Usually the best time to invest with crypto in particular, like everyone would have been fearful of, for example, Bitcoin when it first came out, or when it first started getting a little bit more popular. No one believed in it, therefore it had extreme fear, therefore the best time to buy. And as you can see, multi-millionaires, billionaires have been created from that fear. And it's the same working the opposite way with greed. When price is working at all-time highs, that's not normally the time to be buying, that's normally the time to be selling, because people are getting greedy, and that's where you want to be out as a trader or investor. So yeah, hopefully that helps.
Now, if you are a standard day trader where you're looking at maybe mechanical movements on the charts, it's going to be a little bit harder for you, as there's less decisions going into your trades. However, that volume might help you hit TPs quicker, etc. But I'm going to talk you through not just trading, but how you can generally potentially invest or just profit from this turn of events. Now, one thing that I'm probably most known for is utilizing something called prop firms. So right now, prop firms, otherwise known as proprietary firms, are very similar to brokers in the fact that you are able to trade on their platforms. However, they do so with high amounts of leverage. They leverage up your initial investment, all on a demo account with even more leverage. However, to actually get funded in the first place, you have to beat two challenges usually. Phase 1 being about a 10% target, and phase 2 being a 5%. I'm sure the guys who watch me often know what prop firms are, but if you don't, this is just a brief explanation. Once you pass those challenges, you then get the funded account, and you're able to trade that like a usual account and take profit splits. For example, an FTMO account might cost you about £500 or $600, $500 to take an $100,000 funded challenge. Once you make 10%, you move on to phase 2. Once you then make 5%, you move on to funded stage. So in total, you need to make around 15 grand. Then whatever you make, you take 80% off. So let's say 1 month, you make 8 grand. You would take 80% of that. So 8 grand minus 1.6, obviously the 20%, you take home 6.4K, which is great news. And it's free money at that stage. You're not trading with your own capital. You've gotten to that stage, and you usually get refunded as well for the challenge fee. The only issue with this is the fact that you have a drawdown limit. So you basically only have 10% of what you think you've got. You can only lose 10%. So them asking you to hit a 10% profit in phase 1 or a 5% profit in phase 2 is really an 100% and a 50% target. Why does that now become a lot harder? Because that is not a realistic return that you can do consistently. Bruh. Making 150% return of your equity isn't something that's easy to do, especially when a lot of these props will give you a lot size limit. There won't be much action in the markets to actually pass these challenges quickly and get to that funded stage. And generally it can be a very long process unless you've got a really good funded approach. For me, this has been the difference in passing an 100k or 200k by this time and ultimately passing $4 million in funded capital because of my funded approach. Now, completely ignore that because right now there is enough volume to take full advantage of the markets and the prop firms. This means that using the volume that Trump's creating, or the general economy is currently creating, you should be able to catch a much higher amount of pips or points, whatever you use. Therefore, the 10% target becomes a little easier to achieve. Equally means you can blow your challenges quicker as well. I don't pass every challenge. There's no trader in the world that does. So what you want to do is find a successful way to pass, let's say 50% of them. So if you're investing into $1 million of funded challenges, so let's say around $5,000 worth of challenges, and you pass half of them, you've now got $500,000 in funding. For you to make back all your money, even without a refund, it's just 1.2% returns, something along those lines. Let alone with the refund, you're going to get half that money back as well. In my opinion, prop trading is very much a wider scale style of trading. It's not focused on one account. Very few traders will hold an account for an extremely long period of time, and very few traders will pass their first account, their second account, or even their third account. For me, it was my third. So, like I said, you could massively utilize the volume that Trump is putting into the markets right now to pass these challenges a little more quickly than you would usually, with a bit more volume and a bit better pace to your trading. Obviously, this means you create a lot of capital, you build up your funding, because this is the main issue you're going to have, capital. If you've not got much capital to invest or to make decisions on the charts or trade, whatever you're doing with it, your gains are going to be based around if you do an 100x or an 1000x or something like that, instead of being able to utilize free funding ultimately. Now, this is not the only thing that I wanted to talk about in this video. This is one way that you can take advantage of the current market condition. Another way to look at it is that everything is currently on fire sale. If you're a long-term investor and you're wanting to go down a more safe option, then you should be looking at every single market right now and deciding which has the most potential to continue and take out previous all-time highs and extend like a usual market would. If you're in stocks, you could look at the tech companies, specifically the ones that aren't based around China, etc., may propel a bit quicker than the ones that are. Because if the US have put a specific tariff on China, that's going to affect the companies that are sourcing things from China a lot more so than ones that aren't. It's very simple ways to understand the market here. If there's companies that you know aren't reliant on tariffs or exporting/importing for their goods as much as others, typically they're going to continue the trend of breaking through highs, raising price, and have a lot more upside potential than maybe the ones that are. So there's a huge potential there to get good investments at good price. And that is ultimately what trading is. You want to buy low, sell high. A lot simpler said than done. But let's actually go on some charts now and show you exactly what I'm talking about. Okay, so just to amplify what I'm talking about there. So this is the NASDAQ, which is the top tech companies. This is the S&P, which is obviously the top overall companies. Now, if you're looking at the way price is moving, it's extremely bullish, obviously, on both factors. However, you still do have these times where price has these big drawdowns. As you can see, we literally had COVID here attack the S&P. Equally, we had COVID here, a nice little drop as well. As you can see right there, we can see price drop really aggressively, or not really aggressively, but relatively aggressively there also. Now, what does that mean? Does that mean that price doesn't take out all-time highs again? Absolutely not. As you can see, we quite comfortably broke and absolutely excelled past all-time highs there as well. Equally, we did the exact same on the S&P as well. Obviously, tech is a bigger growing industry right now, so it's a good one to invest in, obviously. And you can see it's moving very aggressively bullish. Just because it's had this small small movement downwards doesn't mean that price is not going to then take out all-time highs again. It doesn't mean for your investments that you're in a massive world of trouble. It just means we're having a setback for the short term. Does not mean that we're going to be out of any opportunity, or sorry, out of any sort of burst momentum for the rest of the year or rest of next year or year after, etc. We may have a bit of a short-term period where we're bearish or we have a slight pullback. I think majority of I think it's going to continue for that much longer, to be honest. Obviously, exports and imports tariffs don't help naturally for any companies. Obviously, for tech companies, I imagine they get all of their manufacturing done in the Asian markets, as well as just general companies as well. So generally, those type of companies are going to be hit quite aggressively. However, I'm sure they'll find a way out and back into growing companies hitting past their all-time highs, as natural economics around the world will push them towards that. I don't think we're just going to see a world decline suddenly and all your investments are just going to be done. These are the biggest companies in the world. I'm sure they're going to have enough system to get past any sort of tariffs, etc. I'd be very surprised if they don't. And every time we have had major setbacks, it just breaks through here, breaks through, and that's the S&P, tech, or NASDAQ, sorry. Same kind of thing. You had initial tech bust here, then you've got pullback, break through, pullback, break through. So like I said, this is a great time to potentially dollar cost average. In my opinion, this is not financial advice, like I said, but this is one way you could be looking at it for your investments, because I know people are going to have investments and probably be very worried about it. In my opinion, when you're feeling like that, it's normally the better time to start DCAing back in even more. So yeah, that is a bit behind obviously me as a trader and how I'm utilizing this opportunity to actually trade with a clearer bias and gain more funding. I think I've actually just done $1 million in funding, to be honest, this month. I haven't vlogged it much, but I've got Bright funded, Funded X max allocation, Audacity. I've got a phase 2 of 200k, 240k actually. Past a Falcon funded, 200k fully funded. Funding pips for through to phase 2. Blueberry, we're hovering around. Phase 1 basically passed, just needs to be profitable trading days. And yeah, like we're smashing it through, and this is because of the volume in the markets right now. That distribution phase in AMD is the most aggressive part of that pattern, that like I said, AMD, the distribution should be the most aggressive part, which is what we're seeing now. So we could absolutely continue aggressive. I'm hoping for a little bit of retracement first, but I overall bearish on DXY. Does that mean, like I said, for futures traders, etc., that we're just going to be bearish on S&P and NASDAQ? No, not necessarily, because like I said, that's based on the companies, not the value of the dollar.
So to wrap up the video, ultimately what I'm saying is I'm going to be utilizing challenges and scaling my capital times 10 with the volume that's in these markets. I'm hoping DXY continues to dump as we get that AMD to continue playing out ultimately. This means obviously buying opportunities for me on Euro USD and also GBP USD. But equally, in my investments, I'm looking to continue to dollar cost average into markets like S&P, NASDAQ, and individual companies that I think have a great long-term potential. Also, crypto, same kind of idea. Dollar cost averaging whilst price is really in the dumps, and most people are completely scared of it and think it's never going to go back to all-time highs. So, if you did enjoy the video, please do make sure to subscribe. We've just hit 10k. I can't thank you guys enough, but I plan to be doing some incredible things on this YouTube, so wish for you all to be a part of it and to provide you guys as much value as I possibly can. If you're wanting to find out a little bit more about what I do day to day and how you can do the same kind of thing, do drop me a message on Instagram. These are my socials, or click the link below and you'll be able to book a call directly with me, and we can talk through what you can be doing to become a profitable trader or a day trader and live a very similar lifestyle to myself in being full-time, analyzing charts, exchanging your skill set for that time, financial, location, freedom, and living the way that you want to. If that sounds fun, then book a call with me and I'll be very realistic on how long that's going to take and what you should be doing education-wise to get there. Cool guys, appreciate you a lot. Thank you.